Did you know that a single share of Berkshire Hathaway, Warren Buffett's company, currently trades at over $500,000? This staggering figure is a reflection of the immense value that Buffett has created over the years. That's right, $500,000 for one share. It's a number that leaves many in awe and speaks volumes about Buffett's investment prowess. This astronomical price tag is a testament to the incredible wealth-building power of Buffett's investment approach. His strategy has consistently outperformed the market, leading to exponential growth. Warren Buffett, often called the Oracle of Omaha, is a legendary investor. His insights and decisions have shaped the financial world. He is known for his simple yet effective investment strategies. These strategies focus on long-term value rather than short-term gains. Buffett's success didn't happen overnight. It was the result of years of dedication, learning, and smart decision-making. He built his fortune steadily over decades, demonstrating patience and discipline. Buffett focuses on solid businesses with long-term potential. He looks for companies with strong fundamentals and capable management. He buys them at a fair price and holds them for the long haul, allowing their value to compound over time. This patient and disciplined approach has made him one of the richest people on the planet and a role model for investors everywhere. For many people, the world of investing can seem like a confusing and intimidating place. The sheer volume of information and the complexity of financial markets can be overwhelming. Where do you even begin? The first step is often the hardest, and many people feel paralyzed by the choices. How do you pick the right stocks? With thousands of options available, making a decision can feel like a shot in the dark. What if the market crashes? The fear of losing money can be paralyzing, especially for new investors. These are all valid concerns that can make investing feel risky. It's natural to worry about the potential downsides. One of the biggest challenges for new investors is simply knowing where to put their money. The options can seem endless and confusing. There are so many different investment options, from individual stocks to bonds to mutual funds to real estate. Each option has its own set of risks and rewards. It can be overwhelming trying to figure out which investments are right for your goals and risk tolerance. Understanding your own financial goals is crucial. Another common challenge is managing risk. Balancing potential rewards with acceptable levels of risk is key. All investments come with some degree of risk, and it's impossible to eliminate risk entirely. However, understanding these risks can help you make better decisions. However, there are ways to manage risk effectively. Diversification is one of the most effective strategies. This includes diversifying your portfolio and not putting all your eggs in one basket. By spreading your investments across different asset classes, you can reduce risk and increase the potential for returns. Warren Buffett has a set of core investment principles that have guided him to success. He looks for undervalued companies with strong fundamentals. He calls this value investing. Essentially, he aims to buy a dollar for 50 cents. He believes in the power of long-term growth and doesn't get swayed by short-term market fluctuations. Buffett is a voracious reader and spends countless hours researching companies. He pores over financial statements, analyzes industry trends, and reads everything he can get his hands on about the businesses he's considering investing in. He understands that knowledge is power when it comes to investing. So how would Warren Buffett invest $1 million today? This is a question that intrigues many investors and financial enthusiasts alike. While we can't know for sure, we can make some educated guesses based on his well-documented investment principles and past decisions. First, he would likely put a significant portion of the money into a low-cost S&P 500 index fund. This is a strategy he has often recommended to average investors. This provides broad market exposure and instant diversification, reducing risk while capturing the overall growth of the market. Next, he might invest in a handful of undervalued companies that he believes have strong long-term growth potential. These are companies that are trading below their intrinsic value. Think of well-established businesses with a proven track record of profitability and a competitive edge in their respective industries. Companies like these often weather economic downturns better. Finally, he would keep a portion of the money in cash. This is a crucial part of his strategy. This provides flexibility to buy more stocks if the market declines and ensures he has dry powder for any opportunities that arise. Cash reserves can be a powerful tool in volatile markets. The key takeaway from Warren Buffett's investment philosophy is this: investing doesn't have to be complicated. Simplicity and discipline are often the best strategies. Stick to the fundamentals, do your research, and be patient. Over time, these principles can lead to substantial wealth accumulation. What are your thoughts on Warren Buffett's investment style? Do you think it's still relevant in today's fast-paced market? What strategies would you use if you were starting with $1 million? Would you follow Buffett's blueprint or carve your own path? Share your thoughts in the comments below. We'd love to hear your investment strategies and ideas.